You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Tuesday, 26th day of August, 2025. We got a holiday coming up next Monday, the big Labor Day. Yep. So we officially have a 3-day weekend. I'll be out Friday. Michael will be here though. I might be out Thursday too. We'll all be out Monday, and then we'll pick up the pieces where we left off come next Tuesday. But right now, we're just glad to have you here. We do 2 live broadcasts every trading day. The first broadcast is our live training room. So that one, of course, is reserved for our traders and those who are taking their 1-week free trial. If you have not yet taken your 1-week free trial, when Michael joins us in about an hour, he'll walk you through step by step how to take the trial at least a couple times. We'll get your indicators up and indicating today. Your trial will officially start tomorrow. I know, we got a weekend coming, we got a holiday coming. Don't worry about that. You get 5 consecutive trading days when you take the trial. The weekends and holidays do not count against your 5 days. So you'll be fine. Get it done today. The sooner you start, the sooner you learn, the sooner you learn, the sooner you earn. I'll have to write that down. Okay. When the live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute break and then come back for this broadcast, the noon broadcast, which, unlike the morning broadcast, is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. There's 2 different ways to join the afternoon broadcast live. The best way, you only have to do it once. Go to mytradingiq.com. Scroll down the page to where it says Noon Broadcast. Click the link, fill out the 30-second registration form, and you're done. Going forward, what will happen, every trading day, you'll get an email about an hour before the broadcast starts. In the email, there will be a link. So at 12 noon Eastern, all you got to do is click the link in the email, and it will automatically log you into our platform. The benefit there, you have access to the question box, so you can ask questions and participate in the discussion. Of course, there'll be days you're out of the office, away from the desktop, but you still want to join live. And some days you'll be busy, so you can't join live, but you want to get caught up later. You can do both of those via our YouTube channel, which is easy to remember. youtube.com/CFRN. Christian Financial Radio Network since 2005. But you don't have to remember all that. Just youtube.com/CFRN. Now, not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting, but we also archive each and every daily broadcast. Currently, there's over 2,800 daily episodes archived for your educational and viewing pleasure. And if you're new to our neck of the woods, it is a great way to get to know who we really are. In fact, thanks to the power of YouTube, you can actually see how we've evolved over the years. You can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Obviously, you're not going to watch them all, nor do you need to. But it's a great resource to have at your fingertips, and, well, it lets you know we've been around a minute. And again, at your leisure, you can see how we've evolved over the years. This is our schedule for each afternoon broadcast. About 1 o'clock Eastern, Michael will join us for a recap of what happened this morning in the live training room, and then a little live trading on the TradingView platform. But we'll get started, as we do every day, with our daily devotional. Now, the topic that we're on right now, we're in day 4 of 7. Living large in a small world. It's basically a study on the book of Philippians. Our scripture today, Philippians 1, verses 19 through 20. And I'm going to share it from the NIV translation. For I know that through your prayers and God's provision of the Spirit of Jesus Christ, what has happened to me will turn out for my deliverance. I eagerly expect and hope that I will in no way be ashamed, but will have sufficient courage, so that now, as always, Christ will be exalted in my body, whether by life or by death. Again, that's Philippians 1, verses 19 through 20. Living without compromise. It's human nature to try to get the most out of life. We want to maximize our pleasure and minimize our pain. It's also human nature, based on the divine image we were given at creation, to crave meaning, purpose, and lasting impact. So what happens when these two desires come against each other? How do we respond when our pleasure, pain impulses are at odds with our meaning, purpose impulses? We may have to compromise one or the other. Paul was aware of the possibility of compromise, and he chose never to be ashamed by his choices. A bold statement in Greek and Roman cultures, where shame and honor were social currency. For Paul, honor implied boldness for Christ, and he had consistently chosen to be bold in the past. Now, with the threat of pain and death, he resolved to maintain his testimony and honor his Lord regardless of the cost. There would be no compromise here. Paul was physically in a precarious position. The empire had control over his body, and his life was in its hands. But contrary to the declarations of imperial loyalists, Caesar was not his Lord. Jesus was. No matter how much power the empire seemed to have, Paul had a choice in how he lived, and one way or another would continue to offer himself to Jesus, whether in life or death, or actually in both. Paul would glorify Christ. We today live in a precarious position as well. Usually not in a life or death situation like Paul found himself, but still under constant pressure from our culture to either conform to its image or experience the discomfort of noncompliance. We daily make choices about honor and shame. Will we honor Jesus and therefore risk being shamed by our world? Or will we honor our world and risk dishonoring Christ? When our pleasure, pain impulses are at odds with our meaning, purpose impulses, which will we value more? These are not rare choices to make. They confront us in subtle ways every single day. When you see your life as a series of choices to honor Christ, whether through enjoying his many gifts and blessings, bearing spiritual fruit, or offering your life to him, everything takes on a new meaning. The abundant life he offers comes with freedom and joy. But it also means living without compromise. You abandon yourself to him, boldly worship him, and see yourself as an instrument of his glory in life and death. You are his, and he is yours. And in his eyes, you will never be ashamed. Let's pray. Heavenly Father, we thank you that what the enemy tried to use to break us, you're going to use it to bless us. We know that through the prayers of your people and the power of the Holy Spirit, we will not be shaken. We declare that we won't shrink back. We won't stay silent. We will lift up the name of Jesus wherever we go, whether in life or in struggle. Let Christ be magnified in each and every one of us. Give us boldness to live unashamed, and give us the courage to stand strong. It's in Jesus' name we believe and pray. And everybody said, Amen. Amen, and happy Tuesday. It's a happy Tuesday for you, whoever you are and wherever you are. Let me give you the numbers from around the world. Start here in the U.S. with the cash markets, or the indices as they're called. Currently the Dow is down 12 points. The Nasdaq's up 49. S&P 500 is up 6.5%. The Russell 2000 up 16. Yes, you are correct. More flat, sideways trade. And we do have some high impact news this week that maybe will shake things up. Currently, crude oil, it's a big mover on the day, down at $1.36, trading 63.43 last. That's a drop of well over 2%. Gold is up $17.10, trading 34.40 last. Silver is down 4 cents, trading 38.66 last, staying above the $38 mark. In the Asian markets at the close, the Nikkei fell 413 points, 1%. Shanghai dropped 15. The Hang Seng fell 304, which is almost 1.25%. And in the European markets at the close, FTSE down 55, the DAX down 120, and the CAC down 133. For the CAC, that's almost 1.75%. So we had a red day in Asia. It was a red day for the UK. And at the moment, it's a mixed Radio Tuesday here in the US of A. The Dow looks like it's about to slip into the green, and then we can say it's a green Radio Monday here in the US of A. Currently, the Dow is down less than half a point. So it won't take much to move it into the green territory, but keep in mind the other three major indices, the NASDAQ, the S&P, and the Russell, they're in the green, but not by a lot. The Russell is the deepest in the green on a percentage basis, about 0.75%. News. Chinese scientists have successfully transplanted a pig lung into a human being for the first time, with the organ partially functioning before it was removed. Researchers used CRISPR technology. That's CRISPR, if you want to go study that, to make 6 gene edits to the left lung of a pig whose organs are roughly human-sized. They then transferred the lung into a brain-dead 39-year-old man. At first, the lung succeeded in delivering oxygen to his blood and removing carbon dioxide. Within 24 hours, however, there were signs of damage and indications that the body was rejecting the organ on days 3 and 9. Scientists ended the experiment following fluid buildup. The patient was removed from life support per his family's wishes. Researchers believe further experimentation could help improve retention of the lung, since even human-to-human lung transplants often fail sooner, within hours. Researchers hope pig-to-human transplants will help eliminate long wait times for organs, including lungs, kidneys, hearts, and livers. Sounds like science fiction, but it's actually here. There's a shakeup in the caffeine market. American beverage conglomerate Keurig Dr. Pepper announced plans yesterday to acquire Dutch coffee giant JDE Peet's for roughly $18 billion. The all-cash transaction would consolidate their coffee business into a new company. Keurig Dr. Pepper's remaining portfolio, including Snapple and 7-Up, would become a separate entity, effectively undoing an $18.7 billion acquisition from 2018. Shares of Keurig Dr. Pepper fell 11.5% on the news. Now, this is, we'll just put it in the odd category. The world's first commercial offshore carbon storage facility began operating yesterday off Norway's western coast. The Northern Lights Project, as it's called, led by oil giants Equinor, Shell, and Total Energies, aims to cut industrial carbon dioxide emissions by capturing carbon from smokestacks and injecting it beneath the North Sea seabed for permanent storage. Captured CO2 is liquefied, shipped to a terminal, and pushed through a 68-mile pipeline into the seabed's geological reservoirs, about 1.6 miles below the ocean floor. The first CO2 injection came from a cement plant in southeast Norway. Norway's state-backed project currently has a storage capacity of 1.7 million tons of CO2 per year and targets an increase to 5.5 million tons by 2030. Although endorsed as a climate tool by the UN, carbon capture and storage is expensive, complex, and viewed as controversial. Certainly seems controversial to me. Critics argue that the method potentially extends the use of fossil fuels and redirects resources from renewable energy. Okay, that's not the part I find controversial. I mean, eventually you run out of space, right? And what happens when there's the first leak? Does everything in the ocean die? I don't know. Doesn't sound like good science to me, but then hey, I'm no scientist. Moving on. Stocks wavered today, limp like a biscuit. U.S. stocks wavered today as Wall Street absorbed President Trump's bid to remove Federal Reserve Governor Lisa Cook and his fresh threat to impose digital tax-related tariffs. There'll be more about Ms. Cook. The Federal Reserve may have been late raising interest rates as inflation surged in 2021, but that fixed everything, huh? But measures of inflation expectations throughout that period showed broad belief that prices would cool. Remember transitory inflation? A fact that made the battle easier and less costly to wage, with bond markets even tightening financial conditions well before the U.S. Central Bank hiked borrowing costs. It's a great way to heal a fragile economy. Higher interest rates. In a paper presented to global central bankers at a Fed conference in Wyoming on Saturday, part of this whole Jackson Hole thing, an economics professor at the University of California, Berkeley, said the episode showed the value of Fed credibility in action, and also the stakes on the table if that trust is eroded. a no longer abstract risk after President Donald Trump moved on yesterday to fire Fed Governor Lisa Cook in the first such move by a U.S. chief executive. It's easy to forget how remarkable it was that the Fed was able to look through 7% to 8% inflation while maintaining almost completely anchored long-term inflation expectations. This requires an extremely strong reputation, Nakamura said, something that hinges on institutions like central bank independence and a strong track record. And those are things that take a long time to build up and perhaps not very long to destroy. The Federal Reserve needs to be destroyed. Period. Free markets. United States Treasury should be printing our money, not the Federal Reserve, a private corporation. I know I say it all the time, but I just don't think it gets through to most people. It is a privately owned corporation, and everybody just goes, well, that's nonsense. Why in the world would America allow a privately owned corporation to print our money and control our monetary policy and set interest rates that affect so much? Well, we did. And the only president that ever tried to fix it, John F. Kennedy. Trump, he wants to fix it, but what steps will he take? I don't know. I guess we'll find out. President Trump warned he could impose new tariffs and export limits on advanced technology and semiconductors in response to digital service taxes in other countries that he says unfairly target American tech firms. In a post on Truth Social last night, Trump argued the taxes are meant to hurt U.S. companies while letting China's biggest tech players off the hook. As the President of the United States, I will stand up to countries that attack our incredible American tech companies, Trump wrote. Trump did not specify any countries in his post, but the European Union has employed various taxes and regulatory methods that Trump has said unfairly targets U.S. tech giants. The EU defended its use of the measures on Tuesday. It's the sovereign right of the EU and its member states to regulate our economic activities on our territory, according to an EU spokeswoman. The new drama comes after the US and the EU established a written framework for the trade deal agreed to in late July. Also yesterday, Trump said a 15% tariff on imports from South Korea would hold despite South Korea's president's visit to Washington, D.C. yesterday. The two countries struck a trade deal in July, allowing South Korea to avoid a stiffer 25% tariff. Tensions over the agreement have persisted. It's about to get wild. Options traders are pricing in about a $260 billion swing in NVIDIA's market value following the chipmaker's second quarter earnings report expected tomorrow. NVIDIA is up a little over 1% today at the moment. NVIDIA options implied a roughly 6% swing for the shares in either direction following the results, which will be reported after the markets close tomorrow. Now, as you know, stocks stop trading at 4. So about 4:05, 4:10 we'll get NVIDIA's earnings. The futures market, however, continues to trade each day until 5 p.m. Eastern. So while the final hour of futures trading is typically pretty quiet, I suspect tomorrow it will be pretty active, at least for the NQ. It's a big swing, 6% in one direction or the other. In an unprecedented move, here's that more Lisa Cook news. President Trump said he's firing Federal Reserve Governor Lisa Cook, marking a sharp escalation in his efforts to exert greater control on one of the most powerful financial institutions in the world. And we allowed that to happen. Thomas Jefferson warned us not to let it happen, but we did. Trump took to social media to announce that he would be removing Cook effective immediately over allegations that she committed mortgage fraud before she joined the board. In response, Cook said that she would not step down and maintained that the president has no authority to fire her. President Trump purported to fire me for cause when no cause exists under the law, and he has no authority to do so, she said in an email statement. I will not resign, she says. Cook made headlines 3 years ago when she became the first black woman to serve on the Fed's Board of Governors, which votes on the central bank's key interest rate decisions. Prior to her appointment to the board, she was a longtime economics professor and also held roles in the Clinton, George W. Bush, and Obama administrations. No real job. Okay. Here's what to know about Lisa Cook. How long has she been a Fed governor? She was appointed by Joe Biden in 2022. Her nomination was opposed by most Senate Republicans, and she was approved on a 50-50 vote with the tie broken by then Vice President Kamala Harris. When she took office, Cook became the first black woman to serve as Fed governor. She initially filled an unexpired term and is reappointed the following year. Her current appointment runs through January of 2038. So qualified for the job. Well, the new iPhone's coming, and it's the thinnest ever. Apple usually announces its new hardware in the fall, and this year is likely no different. The event is reported to be on September 9th, and Apple is expected to release its iPhone 17 lineup, along with updates for the Apple Watch and AirPods. As always, there are many rumors circulating, including bigger screens, improved cameras for the iPhone 17, and the introduction of an ultra-thin iPhone Air that could replace the Plus model. More broadly, Bloomberg's Mark Gurman reports that this will be the first of 3 planned years of major iPhone redesigns, with a foldable iPhone coming in 2026. Now, this is a big deal. This news is a big deal. It certainly is for me, because I have YouTube TV. And what do I watch 90% of the time on YouTube TV? Fox. Yeah, I know I said that out loud. It's the truth. It's either Prime Video, it's mostly Netflix, then Prime Video, and then a couple shows I like on Fox. So what does that have to do with anything? YouTube has said it will shut off Fox programming, including Fox Sports, from its YouTube streaming service unless a new contract is reached by 5 p.m. Eastern tomorrow. threat came just days before week 1 of the new college football season and the first game of the National Football League campaign. Fox is televising the biggest college football game of the week. Number 1, Texas, at number 3, Ohio State, at noon Eastern on Saturday. YouTube TV, which, by the way, it's a smoking deal, $88 a month. You get a lot. You really do. Unlimited cloud storage. YouTube TV, a unit of Alphabet's Google, wrote in a blog post that Fox was asking for payments that are far higher than what partners with comparable content offerings receive. Our priority is to reach a deal that reflects the value of their content and is fair for both sides without passing on additional costs to our subscribers. It added that the discussions are continuing and it is working diligently with the team at Fox to reach an agreement. YouTube TV has said that if a blackout occurs and continues for an extended period of time, it will give members a $10 credit. Yeah. Now, if you Google Fox, YouTube TV, just Google that. It'll take you to a link where you can send an email to complain to Fox to not do this. I don't think Fox wants to upset a lot of viewers right now. But maybe they don't care. Maybe we're not as important as we thought they were. What they really want you to do is they want you to sign up for what's called Fox One. That's a streaming service that has everything Fox. It doesn't include Fox Nation, though. It's $20 a month, I think. So we'll see what happens. Tomorrow, 5 o'clock's the deadline. Logic 247, that's our 24/7 around-the-clock E-mini alert service. We're in week 369. Over the last 369 weeks, we have issued over 20,350 alerts. And I didn't issue any alerts last night because these flat markets I'm not invigorated. So, since the markets opened Sunday night at 6 p.m. Eastern, we've issued a total of 14 alerts. Still waiting on the outcome of 6. 8 actionable alerts. So far, nothing stopped out. What a quiet week. Now, last week was a little more exciting. Where did it go? Here it is. Last week, week 368. That's not right. I thought I put that in here. Yeah, here it is. Okay. No, that says Friday at 6:30 a.m. I was positive I put this in yesterday. Where'd it go? Where'd it go? Here it is. Last week, week 368, we issued a total of 55 alerts, 9 never triggered, 4 stopped out, 9%. That was last week, week 368. That was a recap yesterday, the first day of the week, and nothing's changed. When we go to the charts, you'll see why. Now, the logic alerts are designed to help you learn how to read a chart. If you don't use them for the reason intended, someday you'll regret it. You need to learn how to read the chart. Nobody knows what's going to happen next in the market, but it sure is helpful to know what the next high probability move is. That's how, over so many weeks and over 20,000 alerts, we've averaged on a weekly basis 20% or less of the alerts being stopped out. It's based on simple market structure, simple process we teach all of our passport holders. Now, we've had Logic 247 for a little over 7 years, but quite a few years before Logic 247, we had our original alert service, the concierge trade alerts. The Logic alerts can come out anytime around the clock, 2 a.m., 2 p.m., futures trade around the clock. We have traders around the globe. Our day session is their night session, and vice versa. But the CTAs are published as a static report, 5 minutes ahead of the Globex Open most evenings. The only time they aren't posted ahead of the Globex Open is when there's some extenuating circumstances or I'm out of the office. And when that happens, I always put a note in the Telegram discussion group. So last night, not that it mattered because of the flat markets, all of our traders and trial members had all of these targets 5 minutes before the market opened. The S&P 500, the Dow, the Russell, crude oil, the NQ, gold, and silver. So let's just see, how flat is it? Pretty flat. All right, this is the daily chart of the S&P 500 E-mini, the bellwether, as it's called. This is the all-time historic high, 65.0875. Now, from that all-time historic high, we got a retracement to the BBC, the pullback held. And then just when it looked like we were going to put in a new all-time historic high, we didn't. Now, this is today, the 26th, Tuesday, Monday. What you're seeing up here is a Sunday night Globex Open. So Friday, it looked like we were headed to put in a new all-time historic high, but we fell short. So we closed Friday at 84.75, and then we opened Sunday night at 93, and then first we found support yesterday when we dropped to red and falling. And then overnight we came down, we tagged the black step line, spiked it a bit, didn't quite make it to the daily BBC. Now we're up against resistance at red and falling. So yesterday red and falling was support, today it's resistance. And the markets are flat and sideways. All alerts, the Logic 247 alerts and the concierge trade alerts, are created on the 30-minute chart. Nothing magic about 30 minutes. It's just a time frame I chose years ago. Say if it's not broke, leave it alone. So I have. The vertical line separates today, Tuesday. Back here's Monday. Back over here's Friday. That's when we had that huge rally that threw everything kind of out of kilter. Okay, we still haven't gotten a 50% retracement off that big move from Jerome Powell. That's when he took the mic at 10 a.m. Now, this is based off him saying that maybe at the next meeting we'll cut interest rates. Imagine what an actual interest rate cut might do to the market. Yeah, it's going to send it higher. But a quarter point is not going to fix the problems. So, anyway, apparently the president doesn't have the ability to control what the Fed does or who runs the Fed. So, you and I don't either. They say get out and vote. Your vote counts. Does it? Every time the president tries to do something, some federal judge somewhere, some activist federal judge, slaps it down. I put a post on Truth Social last night. I said, hey, President, we love you. We're praying for you. You have our support 100%. But what's going on? And for a minute, we have control. The House and the Senate. Shouldn't we make the most of this time fixing what's broken with our system? I mean, the president, I admire him so much. He gets up every day, focused on the job at hand, and he goes through the motions. And he's not just going through the motions. I mean, he's very passionate about helping you, about helping America. We are America. And every time he does something, like this illegal alien they tried to ship out of the country yesterday to Uganda, some federal judge that nobody ever heard of, that nobody voted for, nobody elected, she slapped the president's hand and says, oh, no, you don't. Did the framers of the Constitution not see this coming? And why is it that it's never been a problem in history that I remember? And why is it a problem now? What's going on? Oh, yeah, we're supposed to be looking at the charts. Well, that kind of garbage creates this kind of noise. So we opened last night, dropped to the short target, which everybody had 5 minutes ahead of the open. Spiked it. Buyers came in here for no reason I can find. That sent us back up to the weekly trading zone overhead. And then we hit the BBC. The pullback to the BBC holds more often than it doesn't. So we got a leg, a retracement, and we got above the BBC. So we got a leg and a retracement. Again, the pullback holds more often than it doesn't. Now, is this a good spot for resistance? Should be. We spiked it a little bit. We're always suspicious of a little bit. I suspect price will work its way back down to this support times 2 area. The next major resistance overhead is at the bearish cross. That's when the red line gets below the green line. Around 64.69. Price can get up there. That should be good resistance the first time up. And then we got the long target here, based off this spot right here where blue turned to red yesterday. A leg and a retracement and a leg where we failed to put in a lower low, so not a trend. And then a leg and a retracement and a leg where we really failed to put in a higher high because we didn't close above this. In fact, as you can see, we're heading back in the opposite direction to support times 2. The Dow, here's where we opened last night, below the BBC, so we expect lower prices. We hit the short target to the tick. Now, this is Tuesday, this is Monday, this is Friday. See this little spot back on Friday? Where you got a wick to the upside and a little tiny wick to the downside. Put your cursor right in that little crevice. And then follow across. What do you have? You have the short target last night. We hit it. Support. That sent the market looking for resistance. The pullback holds more often than not. Resistance sends the market back to support at the short target. Red and falling turns to blue and climbing. We get above the BVC. And then a retracement. Now we're just grinding sideways. I don't know what else to call it. As I mentioned earlier, the Russell had the most movement on a percentage basis of anything. Here's the open last night. Okay. Pull back to the BVC held. Now, the weekly trading zones, they're published Monday morning at 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. Okay. The price dropped, and what was the low? 23.30.80. So would we miss it by 8 ticks? Less than a point. Okay. Support sent us to resistance. Resistance sent us back to support. Ours came in a little bit early. So that's a sign of some strength. So you got a low, you got a higher low. You still have all these obstacles to overcome, but we did. Red and falling turned to blue and climbing. We consolidated at the zone. Only one of three things happens when price encounters a weekly zone. 70% of the time it's consolidation, 20% of the time rejection, 10% of the time the slice. So off we go, right up to the long target. We actually hit 64.5, so we overshot it right there by 2 ticks. And what was that based on? This bearish cross right here, where the red line gets below the green line. When you have a bearish cross that leads to an extended move, the first time price revisits that area will almost always be good resistance. And it was. Get that area right there, right there, right there, right there. Okay. So then we pull back to the BBC and the step line, some support. So now we've traded above the long target. Right up here where blue turned to red, 23.70. Expect resistance there if we continue higher. And then again at 23.73. And then 23.83. That would make the Russell the home run king of the day. In Q. Here's where we open below the BVC. We drop to the short target, which everybody had 5 minutes before the market opened. Market found support here, which again, not an area I would have anticipated support. Back up to the BBC, the pullback holds, back down to the short target. Support holds. We get a leg and a retracement. And we get a leg and a retracement. Now we got a little double top going on right here. Okay. Now right here you had a bearish cross, right? When you have a bearish cross, first time price visits that area, what do you expect? Resistance. And that's what this resistance here is all about. Did we have that on the ES? Oh, we haven't got there yet on the ES. We haven't moved far enough to get there. And the Dow is way up here. Okay, so crude, big mover of the day, I guess. This is where we opened. Got below the BBC. We dropped to 64.37, so we missed the target by 2 pennies. That was based off this right here. resistance at the BBC. Sends us down to the zone. Bounce up into resistance at red and falling, and the underside of the short target. When we trade through a short target or a long target, on the retracement, that target will typically become, like in this case, resistance. And it did. So we travel down to this zone, catch a bounce, travel to the next zone, consolidate, drop below it. Now these lows here, we spiked that low, but we didn't make it to that low, not on this move. Buyers came in, drove us back up to the zone where we found resistance. And then we dropped 1, 2, 3 zones, and we're currently consolidating here. And we're below the BBC. Blue and climbing has rolled over and turned to red and falling. This zone is 63.15/63.20. So I'd be very careful about selling 63.30. I would wait for price to drop below that. All right, Michael's here. So we'll pause. We'll come back. We'll do gold and silver. And then wrap things up. Michael's going to give us a recap of what happened this morning in the live training room. Then do a little live trading on the TradingView platform. Okay, it looks good.
All right, here we go then. All right. Good afternoon, everyone. Today is Tuesday, the 26th day of August 2025. 26th day of August 2025. Now, if you've not taken a free trial with us and you want to, go here to mytradingiq.com, click on the purple button right here. There's no credit card required for the trial. Just click on that purple button. When you do, you will be sent to this registration page. On this page, all that we ask for is your name, your email, your phone number. Fill out these multiple choice questions. All right. Please fill them out honestly. I mean, they're pretty simple. Are you a partner? Yes or no? Have you taken the trial? Yes or no? Will you trade? Did you get referred to us? What platform do you use? We got to get rid of the DT Pro one. It's not active anymore. Anyway, gives you TradingView login ID down here. If you don't have a TradingView login ID, click this button right here. Click this link and go get one. Okay. Once you do that, you can send us a TradingView login ID and we get your indicators indicating. All right, we are not likely to exceed this number right here by the end of the week. Unless we have a couple of really big days, because today we had just a mediocre day, mediocre to down day. We were well below the monthly average and the weekly average today. We just didn't have the opportunity. But anyway, today, the 26th day of August 2025, we're up 66 ticks on the EQ. We lost 14 on the Russell. We made 4 on gold and 4 on the ES, but it's a plus 350 in the morning session. Now, today it took 13 minutes and 4 trades to get to the goal for the day. At that point, we're up $1,100, and we took a total of 31 trades. So on the month now, we're at $10,502. Over 14 business days, averaging $750 per contract per 2-hour business day. On the year, we're at $183,597. Over 144 business days, averaging $1,274 per contract per 2-hour business day. Now, if you were to quit trading when you get the goal for the day and you were to add 1 contract per month, so far this year, you would have only had to work 19 and a half hours and you'd be up $103,592. So you'd be averaging $5,312 per hour. Okay. Okay. That is that. Now, let's get into the actual trades. Today, the majority of the trades, as usual, were on the NQ. We just had a couple of trades on gold. And ouch. Hang on. Let me see what that was. Okay. I don't know what that means. All right. So on the gold, here we are. We started out with a +3. Then we got one more to go to +4. And then I don't show anything here. I think this was a break-even trade right here. I don't show anything added to the totals right there. I know it looks like it wasn't, but anyway, the next one we took was over here, and that was a break-even trade. That was it. That was all we had on gold today. During the break, let's see, this was not a trade right there. This was not a trade. Not a trade. This was a trade right here. Could have gone long right there. And nothing over here on this edge. That is the gold, right? That is the gold. Now the Russell, we'll just do the Russell here. Let's go all the way back here, right? I don't know what I was drawing here on the Russell. I think I drew that yesterday. Maybe I drew it this morning. Yeah, I did draw it this morning. This was a W formation that happened this morning, and I was saying it's going to go up to here, and then if it goes through there, it should go up to here. I don't know if it made it up to there, 2365.8. It did, just recently. That's what I was saying this morning. That's what all that drawing is. It was a classic W formation that happened. Anyway, we didn't have any trades on the Russell until right here. Our first trade on the Russell was right here, and we stopped out. It put us at minus 15. Then we had trouble getting back from that. We had a +5 there that got us to minus 10. Then we had a +1 that got us to minus 9. Then we had a +5 that got us to minus 4. Then we had another +5 that got us to +1. So we were positive right there after that one. We're positive, and then we stopped out, and that put us at minus 14. And that's where we ended it. Well, we had one more break-even trade. But during the break, let's see what we had in here during the break. Hold on. Let's see, during the break. This was a long trade right here. Might have been enough to get your stop to break even. Depends what your fill was. That was right here, right? It's probably not 60.3, and it ran up to 60.8. Yeah, I'd have the exact right fill and get filled. Get your stop to break even right away. And then it turned around and gave you pretty much the same exact trade here on the other side. 59.1 drops down to 58.7. So that wasn't enough to get your stop to break even if you entered right there. So that would have been a rough spot right there. 2 stop outs possibly, or 1 break even and a stop out. You could have gotten most of it back right here on this. And then this was a valid trade right there that worked out really well. And that was the last valid trade. Right, this is pretty close to a trade here, but it didn't come out of the oversold. When it, this, I don't know if Jill's watching right now, but yeah, it didn't come out of the oversold. Okay, you need to come out of the oversold. Right here where it closed up as it went into the oversold, it closed up right at the midpoint. It's not exactly what you're looking for, but it's pretty close. You know, the down close, I mean, an up close, you expect that to go up, not down. Easy question, the whole thing. All right, so on the ES, we ended up with +4. Now the ES, as you can see, was a little colorful today as well. Started off here with a break even, then we had a +2, then a +6, got us to 8, then a stop out, -10, put us at -2. Then we had a +2 that got us to 0, break even, a +4. That got us to 4. And I didn't add this one in right here. Should probably add that in. I don't know what that was. I don't know. Let's see if I can figure it out. I don't think so. It doesn't matter. We had something else there that was profitable, but I didn't add that into the total. During the break, let's see. That was not a trade. That was not a trade. It was above the midpoint right there. If you took it, it went. It went enough to get the stop to break even, but it was above the midpoint, so I would have skipped that one. You really didn't have any more trades in here. That was it for the ES. Okay, we ended up with, well, I say +4. I think it was a little better than +4, but +4 is what I have registered. Now, going all the way over here. All right, on the NQ. Now, we had our very first trade on the NQ was right here. We picked up 12 ticks on that. Then we had a break even. We picked up 4 more there to get us to 16. Then we stopped out, put us at -9. Then we got 4 there that put us at -5. Then we got 45 there that got us to 40. And then 4 there to 44. 4 more to 48. And 2 to 50. Then 4 more to 54. Then 4 more to 58. Then a break even. Then 4 more to 62. And then 4 more to 66. So we had a lot of 4-tick trades today. Now, are those red lines weekly trading zones? No, Jim, they're not. The red lines, I'll show you. I'll go back and show you that again in a sec. Okay. Let me just finish with the NQ stuff. I'm almost done with it. During the break, there was a short right here that worked out very nicely. A short here that you might have taken, you might not have, because it was just below the midpoint. The short here that would have worked out great. You're in the green background, a long here that would have stopped out. A short here that worked out okay. Nothing. That was actually a short there that would have worked out okay. This one right here, I don't know if it's right up above the midpoint. It is right above the midpoint, so that's one of the ones that I probably wouldn't take right there. Okay, and that was it on the NQ. Now, where was all that drawn stuff? These ones right here, these red lines, that's what you're talking about, right? They were not weekly trading zones, Jim. I'll show you what they were. Okay, what I did this morning when we had, whenever I see the price get really close to the YBR, but not actually hit the YBR, not actually flip it, it suggests that there's something going on in the bigger picture. Okay, that's what it suggests. And this morning, we had one right here come really close to the YBR and not flip it. And that made me want to go and look at the bigger picture. Okay, because if it gets really close to the YBR and doesn't flip it, then I like to draw it back like this so you can see what's going on, because there's usually something happening here. And there might be some weekly trading zones in here right now too. I don't know exactly where they are, but there's probably some in here too that sort of help this. But what I looked at was this. You had this big move down, then 50% retracement right here of that leg down, the push down that didn't exceed the swing low. So it showed strength right here. And this formed a W formation, right? An ascending W formation. And that is a bullish pattern. Oops. Yeah, that was not a very good drawing, but I'll do it over here. I'll use one of these instead. That formed a bullish pattern because the bottom was the bottoms were rising. All right. So what you anticipate when you get one of those is that it's going to exceed this level right here. I tried to draw that in, but it wasn't a very good drawing again. And I'll just use one of these. Okay, you expect it's going to exceed that level, and when it does, then I drew this in here. Right. This is the leg length that it should do next. Once it exceeds that, you look left, see the next place it should go. First, there was this one right here that it should get up to, then this right here that it should go. All right, and then once it's exceeded that, then you use price action to determine where it should go. And that's what I did with this green line right here. I had drawn that green line. Now I took that green line from here. Okay, from this swing low at the middle of the W to right here, that swing high. And I redid it right there. I said, that's where price should go. And I did it at this point in the morning. So that's what price action was saying it should do. Okay. And the only reason I looked at it like this was because we pulled really close to the YBR, but we didn't flip. And whenever it does that, it suggests that there's something bigger going on. Okay. It's, the smaller time frames that we're working in, the YBR is actually a larger time frame thing. And when it pulls really close to it, but it doesn't flip it, it suggests that something in a larger time frame is happening. So it makes me want to crunch it up like this. The alternative is I could go to like a 19 range instead. And then you might see it a little clearer in a 19 range. The way the prices were working and ratcheting up in a 19 range. But if we stayed here on the 9 range, then this is what it suggested it was going to do. And it got here, it found resistance there. Then it made it all the way back down to this, found support, made it back up above there, found resistance, then got up above it and used it as support right here. And eventually shoved it up here to this level, which is where I thought it was going to go to. Okay, that's what I was looking at. So it was a big picture look at things. I trade with what's in front of us right here, but that was just a big picture look at things, suggesting where price was going to end up today. Okay, in my opinion. And for those of you guys that are watching any of the cryptos right now, they got hit pretty hard yesterday, and it's a buying opportunity in my opinion. Any of you guys that are watching XRP, because that has been one that I've been watching for a couple of years now. I had said back here about a month ago that I expected it was going to pull back to this level right here. 283 is what I said, but we hit that yesterday. And so that suggests, using the diamond principle, that roughly by this time next month, in a month, we should be up at 450, 451 is what I was thinking. 451, 456, something like that. Right up in that area for the XRP. So this is a buying opportunity. I told you guys back here, anything under $2, look to buy. And I'm saying anything under $3, look to buy. And we're under $3 right now. I have this thing with Robinhood that buys some every day anyway. But when it gets to good points like this, you can go load up on it if you want to. Just one other little thing that I was looking at. In the daily, I'm sure Dwayne's covered this already. We're jammed up in here between the black step line and the MA1, the red and falling. It's jammed up in here. If we close above the MA1 or above the red and falling today, that would be ideal to get us up to new highs by the end of the week, new all-time highs by the end of the week. And I'm thinking perhaps by the end of next week, something could happen that will send us up here. All right. If you look at this, the way that I've been looking at it, you had this leg up, then you had the retracement down to here. You had this leg up. This is a 50% retracement right here, but the legs up are getting smaller. The retracements are getting, well, they're not getting bigger. The retracements they're the right size for the legs up, but the legs up are getting smaller. So right now it's important that we have this next leg up. If we don't have that next leg up, we might get a much deeper pullback in here. But I think there's enough stuff coming out here in the rest of this week. We have high impact stuff all of next week. Every day next week, we have high impact news coming out. So there's, I would say right in here, it would be probably a pretty good time. If it gets down here anywhere toward the BBC midday, I would start looking at call options, like the SPY, the QQQ, RLM, things like that. Because I think by the end of this week, or at the very least by the end of next week, I'm going to be putting all new highs in and possibly be all the way up here. Okay, that's my thought. This is the leg length that it needs to do right here. This is the leg length. So I think it's pretty much the same as this one right here. But let me just draw it for you. This right here is your leg length. So if you take that guy and you move him over here, like that, it's almost right up there where and this leg length came from over here, so it's pretty symmetrical. We'll see. Time will tell. But today, if we close up above the MA1 right here, above the red and falling, that'd be pretty bullish, I would think. Closing below it right here was almost expected. It's 50% retracement of this candle right now is where we're at. If I blow this up and you look at it like this, you take this guy right here and you just do this from top to bottom. Bang, 50% retracement right there. Okay, and that is holding. So this leg up should happen now. Right, in the next, well, for the rest of the week, I would think. And we do have high impact news every day the rest of the week. So just a little bigger picture stuff. Michael's limited view, bigger picture stuff. When Dwayne does this stuff, he goes into a lot more detail about a lot more things. He is I just kind of gloss over the edges of things. We've got a high here of 29.5, so we'll be selling 24.5 on that. 24.5 on the NQ. Okay. Down close would be a perfect spot for a trade right here. This is a perfect spot for a trade. Textbook right here. If we get the down close off the midpoint. So I got my order waiting there. It's got a high now, 29.50. The high is still 29.50. So here's my order waiting. The high just went up a little bit more. So this is going to go up a little bit more. Make sure the window is on top. It is. Okay. And the high is now at 30.25. So it should be right there, 25.25. And there it is. We're in. Now this should be, and there it goes. Bam. Stop to break even. And this should be like a textbook trade right now. Should make it all the way down here at 509.75. Okay. Stop to plus 8, 16, 20. That's $1,000 right there. And I'm out. $1,000. Textbook right there. That was exactly what you're looking for every time. If you just do those trades, if you just wait for that to happen, you do just fine. There's another one right here. Just wait for that to happen. Take just those trades. See, there's one right over here on gold, right here. Same thing. Make it look easy because it really is. You gotta trust the system. That's it. All right, so what time was that? That was at 1:16. Let's see if we can't strip that out. Let's see exactly what you want to do. We got into the oversold over here, so now we could have another trade here on the gold. It's going to have an up close on this bar and then a down close on the next bar. Okay, and as long as it doesn't go up too high, the down close on the next bar could be okay. We'll see. We did the same thing over here on the NQ. A down close on this bar right now would be a trade on the NQ. It's weakening though. You see how it didn't put in a lower swing right here, so it's weakening. But it's got a high here of 26.25, so you'd be selling 5 points below the high of the bar. Right? You see that right there? Now it says 26.25, the high. 5 points below that. 21.25 is what you're going to be selling. Okay, just like this. 21.25. Now this is weakened, right? Because we didn't continue the trend right here. So this is weakened. So if we do trigger in, you got to make sure you bump your stop as soon as you're supposed to. 10 ticks in profit. So as soon as you're supposed to. And we haven't had a chance to yet, but 10 ticks in profit will bump the stop. And hopefully it's going to make it down to the swing low. All right. I don't know that it's going to. If it makes it down here to 19, that would be enough to get the stop to break even, which is the swing low right here on this last leg. If it makes it down here, that would be enough to get the risk off the trade, and I'd be okay with that. But you see what I mean about a weakening right here? It did not continue the trend down. If you were to flip this around and get rid of the background color, this would be a buying opportunity right here. Think about that. If you get rid of the background color. Yeah, that did stop me up. I was kind of expecting that. You get rid of the background color. Right now, what it did was it gave you this leg down with a 50% retracement right here. Then it gave you this leg down, which from the other side, if you're going up, this is a 50% retracement of that leg up. All right. That's what it was suggesting right there by not continuing the trend and stopping right at that point. I thought it was going to go enough to get the stop to break even. That's why I took the trade anyway. But it did. Do you see that? If it would have gone all the way down here, then it would have had I think probably a little more probability of success if we would have gone just a little more with the trend, but it stopped right here. It suggests it's going to go into chop a little bit right now. Okay, and this is not actually a trade over here on the gold. A couple of reasons. One is it's above the midpoint, and two, well, I guess if it gave you the down close and it was at the midpoint would have been flat at the spot where you would have entered. But it was above the midpoint, so it's not a trade. So you guys all saw that, right? How it weakened right there. When I said that, that all made sense. This was textbook. It was perfect right there. And the one after it, well, it followed the rules, but it just didn't have the leg in it anymore. And what I just said about this, where should this one go? If you flip this all around, you get rid of the background color, you do it in the opposite direction. This is your leg length. Right there. Okay, that's where that should go. Right there. You see that, right? So what it should do here is flip the YBR around. Get up here, hit the YBR, flip it around, and then probably pull back and give you a shot at getting up to this level. Okay, that's what it should do. And there it is. It just flipped the YBR. So now we need to pull back to get a shot at going up to that level. So we need a down close on this bar, get us down to about here, then down close on the next bar should get us in the oversold, then an up close on the bar after that. Okay. If you've not taken a free trial lesson, you want to go to mytradingiq.com, click on the purple button, no credit card required. Click on that. It's going to be the registration page. Just fill it out. Gives you trading view login ID down here at the bottom. Okay. That is all that you need to do. Nothing else is giving us anything right now. At the moment. All right, we're almost up to that level right now. It's almost completed that leg length. So now we'll look for it to pull back down and give us a shot off the midpoint. Okay. And we have about 5.5 minutes left. So if anybody's got any questions, just type them in. Markets are pretty slow. Not really a lot going on here. And my 1 month price prediction for XRP is going to be $4.50. So 1 month out. Nice if it were sooner than that. All those ones that I bought at 50 cents. It's a 300% return on those. Just the move up between now and next month. All right, so we almost have a down close here. That should bring us down to about right here. This to about right here. Probably not there. Oh, even further. Look at that. It went all the way down there. Okay, so the next down close. The next down close is going to put us in the oversold, and then we need the up close after that. Okay, so we could have another trade here on the NQ. It's possible. It is possible. All right. Well, sadly, we didn't get a down close. If we do get a down close on this one, it'll put us in the oversold, but we're not going to be anywhere near the midpoint. It did finish that leg up, though. Did you guys understand what I was talking about? The way this all came together? I bring it up here, and I draw it. Price went down, then it retraced, then it went down 50% of this leg length, then it retraced 100% of that leg length. Okay, getting up above that level there is what it needs to do to really change the trend. Oops. That level is up to really give you a trend change. Something that's going to last. This right here. We should get a pullback. That might give us a trade off the midpoint right here, but it's showing resistance right here. So we just turn into some chop right here. It's a distinct possibility. All right. Well, guys, it looks like my time has run out. So we didn't end up with another trade there yet. We're going to wrap this up with, on the morning session, we're up $350 contract, 66 ticks on the NQ, minus 14 on the Russell, plus 4 on gold, and plus 4 on the ES. On the month, 10,502 with one contract, averaging 750 per contract per 2-hour session. On the year, 183,597, again with one contract, averaging 1,274 per session. Right. If you've not taken a free trial, go to mytradingIQ.com, click on the purple button, no credit card required, fill out this form, and make sure you give us a TradingView login ID right there. Okay? And that's it, guys. With that, I can pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. There is Dwayne.
Okay, recap of the morning session.
Today, it took 13 minutes and 4 trades to get to $1,100 with 10 contracts on.
Good job.
Thank you.
Good job. All right, guys. We left off with gold. And here's the story on gold. This was the open last night. And by the third 30-minute candle, we had hit the short target. And then we spiked the zone. Looked like we were heading lower. Just like the other markets. No visible reason for the market to find support there. This huge move on Friday has thrown everything out of whack. It's going to take a few days, maybe a week, for that to all work its way through the system. But basically, we got support at the zone, resistance at the zone, the pullback to the BBC held. When we hit the short target, we hit the long target. Everybody had the targets 5 minutes before the market opened. We kind of just consolidated along the top of this long target. A leg and a retrace, and a leg and a retrace, and they made a leg. It took us right up to the zone at 34.36/37. High was 37.5, so we went a few ticks above the zone. And now the step line's about to cross blue and climbing, so I would expect a retracement back to the BBC. And as you can see, a retracement back into this area kind of lines up with all this right across here. And from there, perhaps we get another bounce back up to the zone overhead. Still got 2 more zones overhead above that. And last but not least, silver. Keeping its head above water. As long as it stay above 38 bucks, I'm a happy camper. So, this was Friday. Jerome promised the world a definite maybe. Support. Now, this was yesterday. We found support at the weekly trading zone, this week's weekly trading zone. Okay. You go to bounce. There's a gap in there. Let's see if that's a bad tick. Yeah, it filled in. Okay. So we found support at the zone. Caught a bounce. Now this first retracement ran right into that bearish cross. And then right up here, where the step line crossed blue and climbing, it's this area right here, resistance. And then the market opened last night just below the weekly zone. We hit support at the short target. 2 hours into trading last night. You only need 2 pennies in silver to get your goal for the day. Support will always send the market looking for resistance. Now this long target was based off this bearish cross right here. The price consolidated along that area for a bit. Then it caught a bounce, but it didn't take out these highs from yesterday. So we come back down to the weekly trading zone, pull back to the BBC holes, and that sends us down to the short target, pretty much to the tick. The low is 88.5. Yeah, so half a penny. We overshot it by half a penny. Support sends us back to resistance at the zone, which sends us back to support at the short target. And up we go. We consolidate at the zone. Then we make the trip up to the long target. We overshot it by a penny. And that's it. And price is still trapped here between resistance at red and falling, support at the black step line. Then below that, you got support at the daily BBC. Then you've got this double bottom here. Then the 62% fib extension. This is an incredibly overextended market, to say the least. Now, could we roll over from here? Yeah, we could. But if we do, there's so many layers of support. Now, this 50 is hell going all the way back to July 3rd. Here we are, August 26th. Held and it held and it held, and then after the new all-time historic high, it held. Now a new all-time historic high. Friday, it looked like we might get a new all-time historic high, but we did not. Sunday night, we opened, we went a few ticks higher and then dropped. And then overnight, we dropped. And we've spent most of the day trying to get back above red and falling. So if we can close the session above red and falling, then that's a strong case for the bulls. If we close closer to the low of the session, that's a good case for the bears, but bulls are sitting right here with open arms, just waiting for an opportunity to buy this thing at 64.42. No, it's more like 64.17. Yeah, it's kind of hidden back here. So there you have it. To become a member, send an email to support@cfrn.net. Just tell Valerie you would like to become a member. She will send you an email. In that email, she will explain exactly what you get when you become a member. She'll provide you a link so you can make your payment. 2 hours of live training every trading day. Private one-on-one mentoring. The strategy you learn, the indicators you own as a passport holder are fluid across all markets and all time frames. Stocks, futures, crypto, Forex, ETFs. Doesn't matter, price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. As a passport holder, you get the Logic 247 alerts around the clock, so you can learn how to read the charts. You get the concierge trade alerts the second they're published each evening, typically 5 minutes ahead of the Globex Open. Monday morning, 6:15 a.m. Eastern, you get the weekly trading zones. Once they're published Monday morning, they're carved in stone for the entire week, as they have been for the last 15 and a half years. They don't change in any way whatsoever. On Thursday afternoons, you'll get your invitation to the members-only workshop Thursday night at 8 p.m. Eastern. And last but not least, you get the golden keys that open all the private channels in Telegram. It's really the heartbeat of the community. Even when you're on the trial, you have access to the public channel so that you can communicate with our traders. Most places won't let you do that. I wonder why. We do. Everything a trader needs, all under one roof, one low price. So wrap it up with our good word for today. And our good word for today is just for today. This is the day which the Lord has made. We will rejoice and be glad in it. Psalm 118:24. When the going gets tough and you're tempted to complain about your lot in life, stop and remind yourself that this day is a gift from God, one you'll never have again. Think about the following words and they will help you. Just for today. I will experience and enjoy each hour to the fullest and not try to tackle my whole life's problems all at once. Just for today, I will try to improve my mind by learning more than I know. I will read something that requires effort, thought, concentration, and commitment. Just for today, I will be agreeable. I will try to look my best, speak softly, and be courteous and considerate to others. Just for today, I won't find fault or try to change or improve anyone but myself. Just for today, I will have a plan and a goal. I might not follow it exactly, but I'll have one nonetheless. By doing that, I will save myself from two enemies: hurry and indecision. Just for today, I will develop my character. I will do a good turn and keep it a secret. If anyone finds out, it won't count. Just for today, I will do something I just don't want to do. That way, I will train my spirit to overrule my flesh and my will to overrule my emotions. Just for today, I won't be afraid to love or to risk. I will endeavor to enjoy all God's blessings and believe that every seed I sow in His kingdom will be multiplied back to me many times over. That's how I will live, just for today. And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.